Good morning all, CamelbackTrading.org coming to you this Monday morning, July 26th. We are looking at Window Trader's market profile of the SPY, IWM, and triple Qs. And a couple things to go over right off the bat. Number one, both the S&P and NASDAQ had an outside week up. Now the previous two outside week ups for the S&P have not provided much of a spark. One was an absolute disaster as we were down pretty good the next week early. The second one had a very tight range, which we got above the outside week up high by maybe a couple of dollars. So we'll see if this one proves to be more beneficial for buyers. We have the Fed this week. I know there's big earnings, but the Fed is front and center for me on Wednesday. Pre-market volume right now is fairly light with 75 minutes to go. As far as destinations for the upside, right now we have 439.94, which is our overnight high, and then Friday's high of 440.30, which is the weekly high and all-time high. For the downside, again, you should have, I'm not going over all of these. Right now the price probe's being rejected at 440.04. The only other number you don't have from Friday is the overnight low of 437.08. Which would be right below the second set of single print and above the daily low from Friday. Now, game plan, again, the market after a move like it had on Friday, gap higher, single print, generally will try to consolidate. Obviously, that wasn't the case the last couple of days last week as it kept pushing harder. But right now, it is following sort of its normal pattern as we are being rejected at the price probe, but we're above at least the single prints, the C single prints, and the gap. So you should get and possibly get some chop here as we're trading right against the afternoon pullback low. Really no bad, this is poor risk reward in here. Two trades I would look for either now and or at 9:30. If we open below the price probe and push up to it, I would take a put play against it because where there were buyers on Friday, they're not there this morning. I would be out above the all-time high. On the flip side, if we are to push down, fill the first set of single prints, I would definitely take a call play inside of C single prints at some point. I'd be out below C's low. And then I would reassess if we get into the gap, what kind of volume and tempo we have. By that point, you would have at least overlap into lower value, if not lower. Again, these are really, really early plays in CamelbackTrading.org's voice channel room. And then on the chart, we went over all three of these indices Friday night. If you want to go take a look at it, if you didn't have a chance to watch it. 1 week to go in the month. One time framing up 9 months, 13 out of 15 months, incredibly healthy. The weekly is in balance, outside week up. Now, if we take out last week's high at some point, I would go back to up. But right now it's balance. If we were to take out last week's low, I would go to down. We'll see if we get some consolidation inside of last week's range prior to the Fed. I would not be surprised if that was to happen. Daily is still very healthy. Also, one time framing up 4 days coming into today with the gap being my main focus. Have a great day trading. Like these videos and subscribe to my channel and come check us out at CamelbackTrading.org. And we'll recap at 4 p.m.